Hello everyone, hope you all are doing well. This is Gurpreet from Commerce Quest.
Let's cover the concepts of capital natured and revenue natured items in accounting, their difference and accounting treatment. The going concern assumption of the gap allows classification of expenses and receipts to be either capital natured or revenue natured, as expenses are either capital expenditure or revenue expenditure. Also, receipts can be capital receipts or revenue receipts. How this bifurcation is made? That is, on what basis expenses and receipts can be categorized as capital or revenue in nature. Let's understand these rules starting with capital expenditure. Capital expenditure rules are: firstly, expenditure that gives benefit of enduring nature, that is, the benefit from the expenditure is beyond the accounting period. Secondly, capital expenditure either increases the earning capacity of the business or reduces the operating expenses of the business. Thirdly, capital expenditure are of non-recurring nature, that is, normally not frequent. Example, purchase of fixed assets like furniture, machinery, building, etc. Accounting treatment of capital expenditure is debited to relevant fixed asset account, also shown on the assets side of balance sheet. On the other hand, revenue expenditures are of recurring nature or repetitive nature, that is, of routine nature. Expenses that are incurred in day-to-day running of the business. Further, revenue expenditures are the expenditures benefit of which is consumed or exhausted within the accounting period, hence are accounted as expenses of the business. Example, rent paid, salaries paid, etc. Accounting treatment of revenue expenditure is: revenue expenditures are debited to trading account or profit and loss account for ascertaining profitability of the business. Further, just like expenditure, receipts can also be classified as capital receipts or revenue receipts. Rules for capital receipt are: business receipts that either increase the liabilities of the business or reduce fixed assets are considered capital receipts. Example, raise loan from bank, sale of furniture, machinery, etc. Accounting treatment of capital receipts. Capital receipts affect figures of balance sheet, either on the liabilities side or on the asset side. Lastly, revenue receipts. Revenue receipts are the amounts received in the normal course of business, that is, from operating activities of the business. Examples, cash received from sales, cash received from debtors, etc. Revenue receipts are indeed incomes of the business. Accounting treatment of revenue receipts. Being the incomes of the business, revenue receipts are credited to trading account or profit and loss account for ascertaining profitability of the business. Hopefully, you have been able to understand concepts of capital natured items and revenue natured items, also their accounting treatment and difference. Thank you.
Subscribe now and press the bell icon. Never miss an update.